Welcome to The Explainer. Today, we're unpacking a truly fascinating crossroads for one of the absolute foundational companies in the tech industry. We're looking at Oracle Corporation, a 46-year-old tech giant that is currently navigating a historic corporate transformation. They're placing massive, game-changing bets on the future of computing, and honestly, they're completely reshaping the company from the inside out. Now, to really grasp the sheer scale of this transformation, we've got to start right here. $117 billion. It's a staggering amount of total debt, and it serves as the ultimate backdrop for Oracle's massive pivot into artificial intelligence. This number sets up the central paradox of our explainer today. How exactly does a company balance record-breaking growth and future potential with such an immense financial load?
Okay, let's dive into the roadmap. Here are the 6 specific areas we'll be exploring today. The Oracle crossroads, record growth and massive debt, the quantum leap, the human cost, the multi-cloud strategy, and finally, will the bet pay off? Kicking things off with Section 1, the Oracle crossroads. A legacy tech giant makes a do-or-die pivot.
Here's the wild reality of their strategy right now. And honestly, it's full of inherent contradictions. Oracle is simultaneously betting tens of billions on next-generation AI data centers. They're pioneering commercial quantum computing in the cloud, and they're aggressively shrinking their global workforce. They are literally building the future while actively dismantling parts of their present. The stakes right now could not be higher.
Moving to Section 2, record growth, massive debt, the financial paradox.
All right, take a look at these figures from June 10, 2026. Oracle announced record fiscal year results. Total revenue hit $67.4 billion. That's up 17%. Cloud revenue shot up 39%, and their cloud infrastructure revenue, that skyrocketed by 77%. In the fourth quarter alone, infrastructure revenue nearly doubled. So looking at this, everything's great, right?
Well, hold on. Not exactly. Check out this comparison. Yes, they generated a record $32 billion in operating cash flow. That is undeniably huge. But their free cash flow was negative $23.7 billion. You might be wondering why the massive gap, because almost all of that operating cash, and then some, is being plowed straight back into massive data center construction.
This breakdown really highlights the extreme cost of this AI build-out. Their capital expenditures for fiscal 2026 hit $55.7 billion. That's a 162% jump year over year. They even overshot their own spending guidance by nearly $6 billion. So how do they fund this? Well, they raised $43 billion in debt and $5 billion in stock, which brings us right back to that $117 billion total debt figure we saw earlier. And get this, they plan to raise another $40 billion in fiscal 2027. But wait, here is the flip side to all that incredible spending: $638 billion. This huge number represents their remaining performance obligations, essentially future contracted revenue. That metric is up 363%, heavily driven by $75 billion in massive AI customer prepayments for GPUs. Think about that for a second. Customers are literally paying up front just to secure space in the data centers Oracle is currently scrambling to build. For the wider tech industry, this really shows just how desperate the scramble for AI compute power has become.
Section 3, the quantum leap. Quantinuum enters Oracle Cloud.
So on August 11, 2026, Oracle announced a multi-year partnership with Quantinuum. To justify all this massive spending, Oracle is looking toward the future of computing architectures. As Quantinuum CEO Rajiv Hazra points out here, the whole strategy is about convergence, bringing quantum, AI, and high-performance computing together under one single roof. And the specs on this are absolutely fascinating. Through this deal, Oracle Cloud customers get direct access to Helios. Now, Helios is a 98 physical qubit trapped ion system with a 99.921% 2-qubit gate fidelity, which basically positions it as the most accurate commercial quantum computer currently available. Notably, a single Helios system draws less than 1% of the power of a leading supercomputer. Oracle is actually deploying this right inside a US-based AI data center, with previews coming up in the next few months.
Now, the goal here isn't just to show off shiny new tech. They're specifically targeting real-world applications where traditional computing is just hitting physical walls. We're talking breakthroughs in materials science, accelerated drug discovery, incredibly complex financial modeling, logistics, and even optimizing global energy grids.
All right, Section 4, the human cost, funding the AI build-out.
While Oracle is spending billions upon billions on infrastructure, we also have to look at the human reality of this shift.
21,000. That's the number of employees let go globally during fiscal 2026. It represents a 13% reduction in their total global workforce, dropping their headcount from roughly 162,000 down to about 141,000.
And this brilliantly illustrates the sheer acceleration of these cuts. Just look at the costs. In fiscal 2025, Oracle spent $374 million on severance and restructuring. Fast forward one single year to fiscal 2026, and that number jumped massively to $1.84 billion. And according to reports from August 12, 2026, this process is still ongoing. Oracle is reportedly planning yet another round of layoffs aimed for completion before September 1st, with some teams bracing for double-digit percentage cuts. The pattern here is factual and very clear. The company is aggressively cutting payroll costs while simultaneously pouring tens of billions into new AI data centers. It's a stark reality that continues to draw intense scrutiny from both employees and investors.
Which leads us to Section 5, the multicloud strategy, partnering with former rivals.
Let's walk through exactly how this integration works practically for customers now that it's generally available. On August 5th, they launched Oracle Interconnect for AWS. Just days later, on August 12th, they announced the general availability of Oracle Exadata database service directly on AWS infrastructure. This means customers can now run Oracle workloads natively inside AWS availability zones, and they can buy them right through the AWS marketplace. They've actually already expanded this to 22 global regions.
But here's why this really matters. Oracle is completely abandoning its traditional strategy of isolating its ecosystem. Instead of fighting direct, head-to-head cloud wars, they are aggressively partnering with their historic rivals, AWS, Google Cloud, and Microsoft Azure. It's an incredible shift, basically acknowledging a multi-cloud reality so they can meet their customers wherever they already operate.
Finally, Section 6, will the bet pay off? Market reaction and future outlook. As you might expect, the market reaction to all of this has been a bit of a roller coaster. Back in September 2025, Oracle stock hit record highs. But year-to-date in 2026, shares are down about 22%, sitting almost 60% below that peak. However, early August brought a bit of a reversal, with shares climbing 17%. And then on August 12th, following that massive quantum partnership news, the stock gained over 5% to close at $153.28. Still, a lot of investors remain on the sidelines, naturally anxious for more clarity around the true long-term costs of all this AI spending. Now, despite that investor anxiety, Oracle's internal outlook remains highly optimistic. Looking at their forward guidance for fiscal 2027, they're projecting total revenue to hit $90 billion. They're also expecting non-GAAP earnings per share to grow by 18%, projecting first quarter cloud revenue growth to land somewhere between 58 and 64%. So, what does this all mean? It brings us right to the ultimate question for this explainer. Will Oracle's massive $638 billion in future AI bookings convert into cash flow fast enough to offset that staggering $117 billion debt? I mean, they are making the biggest foundational bet in their entire 46-year history. The next 12 months won't just define Oracle's future. They might completely redefine the entire cloud landscape. Thanks so much for joining me today, and keep learning.